Good morning, everyone. Happy Monday. How are we doing? Everybody have a good weekend? Hey, Jiraj. Good to have you back, brother. Raj, what's up, brother? How are you? Good morning, Tier 3. Welcome to the room. And our folks on YouTube. Good to see you guys. Alrighty. Wow. It's interesting. Yesterday, I went and put in I went and stuck this in the room yesterday. Whoop. And I was saying, I used a composite profile yesterday, which I haven't done in a long time, and it shows the position and 77.85, and our low this morning was 77.84. So very, very interesting, and we did get that rotation up. So the market is working as it should. That's normal. What's normal is to take the liquidating inventory from Friday and sell it up here for profit. Get rid of it at night, right? Hey, Bram, what's up? So, overnight inventory is 100% long, which means every single trade is above yesterday's close. And so far, we have not had any correction lower. Let's see when London opens in 10 minutes here if we can correct inventory lower. We are inside Friday's range, and now we're above Friday's cost basis. So let's go see what we're shaking with here. I did a larger balance zone. I did 8 to 13 half. You might have a smaller one. You might have like 8 to the 11s kind of thing, 10 and a half, 11. That's okay. I'm thinking we'll probably have a larger range today and something to look for. And we have singles on the way up. Yep. We have singles on the way up, and right now we're going back and forth in those singles from Friday. So that's an area of supply, and we've kind of already chewed through it. Let's see what happens over the next little while. Month end games? Not yet, Raj. We're still in the middle of the month, brother. Don't start talking about the month end yet, man. Not till next week. Oh. No, it's not month-end games, brother. The only thing is the reason why we're doing this is we're at all-time highs, right? We're at all-time highs. There's no inventory here, and that's the reason I normally don't do composite profiles. We did if you count a gap from our Friday's close, yeah, it is a. You guys call that a gap. I don't call it a gap unless we open outside the previous day's range. But a lot of retail traders would call that a gap. What that actually is, it's not a gap. What it is the opening auction gets goosed a little bit and you open above the previous day's close, right? So I'm like, not end of the month yet. Jeez. I'm still enjoying August rush. It's still summer. It's still summer here, brother. So I have a video on why markets sort of quote unquote gap up the next session. That's because of the opening auction. There's nothing for sale because it's all owned down here. So the reason why I did the composite profile, see this big chunk here? What I wanted to show you guys was the position. I wanted to show you, I clumped all of these days together to see that's the position. The position's between 77.52 and 77.85, right? That is the position that's being sold up here in the last couple of sessions, right? The difference is profit, and that's why they call it a market, right? So it's just I don't trade off of this. This is more of it's a learning tool to show you guys what. See, you take all of this and you squish it together, and you can see immediately that the market's in distribution, right? This way, you're not shorting. What happens is you're not shorting the hell out of 77.97 and then getting stopped out at 78.10, 78.15, right? So you can keep, as long as you can keep and like you're aware of your surroundings, right? I used to use the term situational awareness, but that kid went and blew up his fund. We can't use that term anymore, but it is a good term. He just had none, you know? So let's see, we're going to open London in 5 minutes. If you're looking at, like, say, a 15 or a 5 minute chart, say you're not using Sierra chart, you don't have TPO, you can see there's that gap, there's that, what you guys call a gap up, right? And if you went and drew, a volume profile, you'd see all the volumes underneath us, right? So no matter what you're using for your quotes, you'll be able to see that. Yeah, he'll be back. I mean, to be fair, he's 24. Running for 35, $40 billion when you're 24. That's not bad, actually. What was I doing when I was 24? Yeah, he's back actually. A bunch of people backed him again with another 400 million. So he's back at it. He won't make that mistake again. He was food for Ken Griffin. Hey Juan, what's going on? Any obscure music for today? No, I haven't. I'm getting going a little slow. Little slow. Today I'm on package duty for my girlfriend. She's got me going to visit her in October, and I don't know how I'm going to do the London Open. I'm going to be away for like 4 weeks, so I'll have to see if I can do the London Open and do it quietly because she'll be sleeping. Retail is really at the mercy of the order flow that the MMs have, Harry. Retail's really at the mercy of the order flow that's coming in. And retail is at mercy of what we call speculation, right? This market is all speculative right now, right? So, what do we have this week? So far, my friends, no correction to overnight inventory at all. So, when I talk correction, I'm talking go in, we'll probably try and take this inventory from the early Globex session and try and sell it up here using the trap shorts here to hold the market above 78.16. Let's see if we can do that. London is going to open in about a minute here. Let's see if we backfill this move at all. Whew. Looks like a slow Monday. Remember, remember, what do we have going on this week? Right? So not much for news today, right? Tomorrow we have housing starts. Here comes London. That is a poor high, one tick of excess. So they are selling up there at 20 quarter, right? There is a seller up here. That's fine. Okay. So say you shorted 1920, right? Say you short 19 and a half, right? Your stop's just at 20, 20 half, 20 and three quarter. You don't want to spend too much money on a stop. You're looking for bids at 18 and you're looking for bids at 16 and a half. Double top. Remember, Wednesday is the Fed, right? Oh, no, it's not the Fed. It's the FOMC minutes. There's no Fed meeting this month, is there? No, it's a slow month. Hey, Juan, what's up? Jobless claims Thursday, flash manufacturing on Friday. Yeah, should be a simple week. And London opens, can't get lower, pushing higher. Let's see if these levels work to the upside. I don't see a short yet, my friends. I do not see a short yet. I don't know why they charge for Market Watch now. It's crazy. Let's see if we can get down and take out the low of the London Open. Down here, just in the 19 area here. Oh, is it Nvidia coming up? That's right. They always do earnings late, don't they? So that point of control is 1800 contracts. We'll see if we can move that up here and distribute. A little bit of a backfill. There's a 19 print. Let's see if we get a bid or an offer at 19. So what that means is, do we push underneath 19 and offer 18 and a half, 18? Or does the offer lift? Since it's slow, that's pretty much all we're going to do is watch the offer tonight. Yeah, it is slim pickings during London lately because we're at all-time highs. The market needs a really good liquidation, and we'll get much better price action. Let's take a look at what I mean. It's a good point, Dex. Look at that. Okay, we're stuck here above 77.97. Before that, the shorts trapped under 77.21 to 77.40. Look at that profile shape. Short position, short position, short position. Gap, which is a short position. Short position under 76.20. There's short positions all the way down. Another gap, right? The cost base is under 75.11, and we've just been stuck up here, right? We're at all-time highs. There's nobody who owns the ES up here to sell into it. So our trading is down, get stuck, pop back up. Move down, get stuck, pop back up. Because as soon as we get down here, it's bid, 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 bid. Right? So the London session is tougher to trade. Generally, I haven't been trading much at London at all. I don't even have my trading account open right now because it's so slow. So what I do is I do the session with you guys, set you up for the day, so you know where everything's at. Then you go away for an hour or two, come back, and the trading's a little better as the morning wears on. That's all we really can do. We'll get way better trading after a decent liquidation. We haven't had one. We had a liquidation Friday, but that's all it was. It was, just a liquidation of this down here, and now we're right back up. So it is slim. Slim, slim, slim. Yeah, usually Globex, we get some decent trades, but when the agenda of a market changes, you have to adapt. So trade less, right? Don't be digging and hunting around for trades. That never works. Trade less, size down. Just be smart about it, you know. Don't push it when you're not supposed to push it. And that's what we do. We tell you in this session, is this a session you can push trades or should you just go get a coffee, go to the gym? I still This is the first time in about 30 years that I've really enjoyed a summer. I haven't done that in a long time. So, you know, go enjoy the sun, you know, have a bit of a good time. It's not going to hurt us. It won't hurt us to have a good time this summer, right? The market will always be there. Anybody have any questions? How do I like to use market profile? I just look to use them to see the inventory. There's three things in market profile, right? That I that I think are important. One is where the inventory is priced. Number two, whether we have a poor low or a poor high. Shows selling competition or buying competition. How do I know there's a short position from the TPO chart? It's something called single prints. Let me show you. Okay. So do you see this green box here? So when this period here took out 78.14 and a quarter, when it took this level out, anyone who was short under that previous high was using that as a stop. So when the market blew that out and then J period came back, it couldn't get any lower, you see? So that is a short position, right? This is, these are trapped longs. When these single prints happen on the way down, you can see now that the market's going back and forth in this little area here, cleaning up those trapped longs from Friday. So there's a short position and there's trapped longs here. That's why you're getting this choppy kind of right there. So it'll fill that out until there's no supply left, and then it'll rotate higher. If there's too much supply, we'll come down and start filling in this green box. Market profile is a really cool thing. Unfortunately, with market profile, there is a tendency for people to kind of go down rabbit holes and you don't make any money. So what I've done is I've looked at market profile and I've said, okay, what are like two or three things that we can take away from it and use in a practical way, right? So now watch, right? For surfing over here, there's no waves. I'm in Liverpool, brother. There's no surfing here. So do you see as we come down now, I'm looking for a reaction here where this, we call this the J low, the J period low, right? At around 16 and a half. So if shorts are trapped here, they'll come in and start buying before this level because they have to buy back size. So they'll front run 16, which they're doing right now. If they see a lot of sellers coming in, they will drop their buy orders into this green box. Right? There's nothing for sale up here, really. Let's see if it holds that 16 and a half. If you look at a half hour chart, you can kind of tell the same thing. Yeah, if they don't hold, we'll come right back. Usually if they fill, they'll usually catch a bid around 14 because the position is underneath 14. Here, I'll show you. You can see it really clearly on a candle chart. So here's a half hour candle chart. You can see that the position is all underneath here, right? And we're in distribution. So now we're going to put it on sale. If we have to really put it on sale, we'll come back under 14. Yeah. Rotation is exactly what will happen. If those single prints hold, see how we're getting into them, right? No problem. The periods are just half hour. So see how we're filling them? So we adjust the box lower, right? So now the short sellers have seen selling, so they're going to drop their buy orders, right, to try and take advantage of the lower price. So if I needed to buy 500 contracts and I got hit with 50 at 16 and a half, I'll drop my bid to 16. If I get hit at 16, I'll drop my bid to 15 and a half. See? This is called a backfill. You go up to create demand and then you go back and fill in that demand with supply. It's pretty cool. So basically all this market profile chart is a half hour candle chart. That's really all it is. And what it does is it allows you to go into every half hour candle and go, oh, where's the volume? Right? You can see how much you can see the distribution up here, right? That's all they sold all those contracts. Now they're putting it on sale and there's not a lot of volume as you go down, right? That's not the important thing. The important thing is to look for the structure. You can really go down the rabbit hole with these charts and spend a lot of time over analyzing stuff. There, we filled the single prints. Let's see if we catch a bid right there at 14. So if you were short up here, if you were short in the 18s or the 17s, this is where you'd be looking to put some bids to cover. Hey, Brian, um, you're joining us a little late. Why that was a short position is because when we took the old high here, anyone who was using that high as a stop, you can see now that they're you see how we're bid here? That's that's why it's a short position. It's really simple. Nobody really talks about it very much, right? So you anticipate buying there. Now, that level is going to tell you whether the selling's heavy or not. Because if I came in there right now at 78.14 half and I showed the market 2,000 contracts for sale, it would collapse and drop down to the nines and the tens. I read both of them, Harry. They're both great books. Unfortunately, neither of them will help you make any money at all. Those books are wonderful, and they're kind of like reading the Old Testament, right? They're they're beautifully written. There's a lot of information in there, but there's actually nothing in there that will actually help you trade and make money better. It'll help you understand how market profile works. They're a little bit too detailed, so traders get lost in a lot of deep details. I was a market profile trader only up until about 2016 for the first 4 years, and I was not profitable until I started using candle charts for execution. So what I do is the market profile chart. This chart is a map of the city. So if I want to go and do business here, I'll go in and look at the map of the neighborhood using the candle, right? You're not going to make any money trading off market profile. In fact, when the ranges are really big, it's almost impossible, right? Like the old market profile trade would be to buy 14 and a half, put your stop here, but you didn't know where to sell. So here, you know that there's going to be a seller here, there's going to be a seller here, there's going to be a seller here. So if you are long here and this is your stop, you know that there's going to be traffic at 16. So the candle chart will give you much better situational awareness in detail, especially if you're scalping or you're a shorter term trader. It's much better for execution. So I use this to go, okay, this is the neighborhood I want to do business in, and then you just go and you zone in there. How many years? I started trading in 2012. I didn't get profitable until 2014, 2015. It was difficult. It was really hard because you know what? There's nobody that teaches you how to trade with any common sense. They all use all this flowery bullshit language, volume analysis. You've got people out there who are teaching volume analysis who have never traded volume. They have no idea what the hell they're talking about. They're talking about things like unfinished business and all of this crazy nonsense, right? And unfinished auctions and all this bullshit. But none of that actually helps you make money. It just confuses you even more. And then you get traders who say, oh, you've got to correlate markets. I don't trade the ES unless I'm looking at the NASDAQ. That's another bullshit thing because none of them make money, right? And they use all this marketing jargon to confuse retail traders. So it's not until I sat back and I went, what did I used to do for a living? How can I incorporate that into this? And how can I break it down? It took me years to figure out how to simplify this. And then I remembered something. I remembered in 92, when I started the markets, there was a thing called the Visitor Center at the Stock Exchange in Vancouver. And it was full of old people. And they'd have a 15-minute delayed ticker. And these guys were trading off a 15-minute delayed ticker, no charts. How the hell did they do that? And a lot of those old dudes would make money. They'd make $500 here, $1,000 there. Of course, there are people who lost money, right? Who were just degenerate gamblers. But I started remembering the old guys who would make 20, 30 grand a month day trading off a 15-minute delayed ticker. So I started thinking, how did they do that? Well, they'd know a stock really well and they'd watch a level. So if a stock had resistance, if it traded between 30 and 60 cents, and every time it got to 60, boom, there'd be a seller there because the promoter would be a seller at 60, right? When it cleared 60, came back and touched it, they would go long, put their stop under 60, and then they'd look and they'd fan out the sell orders, right? So I was like, okay, that's what they're doing, and that's exactly what we're doing with these candle charts, and that's exactly how we trade. So when the market looks below here and fails, we buy this, we put our stop here, and then we sell into the strength, right? Nice and simple. I want to simplify trading for regular people so they can actually make money, right? So everything we do at Trading Syndicate is common sense, right? There's a business reason for taking the trade, there's a business reason for staying in the trade, and there's a business reason to get the hell out of the trade. And most people don't understand or they're not even taught that, right? So the business reason right now that's going in the market is you see how the bottom of this candle here can't get to 13 and a half. VWAP is here at 12 and change. This space between VWAP and the bottom of these candles, those are buy orders. And the buy orders are now moving higher because the lows are getting higher. The offer is starting to move higher as we take this liquidated inventory and we're going to go and try and sell it up here again, right? So you spend lots of time watching, you watch the offer to see where the sellers are setting price, right? The sellers will set price according to the order flow or the flow of customers coming in, right? That's another buzzword that these idiots use is order flow trading. Oh, order flow software, the order flow book, order flow this. Order flow is just a marketing term. All it means is the flow of customers coming into the market. So if the sellers see a bunch of buyers, they will raise price. If they see that buyers are leaving the market, they will lower price. So you just go and you mark off where the tops of the candles are. That's where they're going to sell into it again because they sold there before. So say your position long 14, stop 13 and a half, right? If the offer cannot get up over the top of these white lines, then you know that you have to get out of your position. It's very simple, right? The trades I like are when it looks below and fails and pops up. That means the sell orders underneath 13 and a half are done. When it's just futzing around like this, I tend to leave it alone, right? Because I know that there's inventory above, they're liquidating. The short sellers are coming in and buying here, but this bid's not stable. So I would rather it do a look below and fail here or a look below and fail of 8. That would be where you get your best deal, is right here, right? At the bottom of cost basis. This is the 2 times profit. This is the 2 times discount, right? Real simple, right? So when you see that, see how we're waiting? So if had I bought it at 14, I'd be getting stopped out, right? Or 15. This way we know that there's sellers up there at 15 and 3/4, and the sellers have moved down from there to here to here. Now they're here. It's amazing how much information a 1 minute candle chart will tell you if people just shut up and listen, right? The top of the candle is where the sellers initiate. There's the look below. Let's see what happens when we go tickle VWAP, right? So just from this little back and forth, we knew not to go long. We need to wait for the trade, right? So it's starting to pop back up over 13 and a half. Give it another couple of seconds. Let's see if it holds. Now, you know the candles are small, so you know business is slow. So you know if we're buying this, it may take a while before it rotates back up. So say you went and bought 14. Put your stop at 13, and you know that there's going to be sellers here at 15, and you know there's going to be sellers right before 16. So now you have situational awareness of where they sell, where they stop selling. So if you were long 14, go put some orders out, put your 15, 15 and a half sell orders in. If those orders do not get filled or executed, you know that you might have to get out of your position. So you use your orders when you're long to tell you whether or not the trade's going to work. So if I bought 3 contracts at 14, I'd have one for sale at 14 and 3/4. Right? I'd sacrifice one to see whether or not anyone wants to buy it. Think of it like you're selling chicken wings, right? That 14 and 3/4 sale is like giving away a sample. So if somebody comes and eats the sample and goes, "Oh, this tastes like crap," you know that you're going to have to reduce the price of your chicken wings. Does that make sense, you guys? That's why you use your orders to let you know whether the trade's working. If you're long and your upper orders don't get executed, then you know that you have to lower price. If you're short and your buy orders don't get executed, you know that you're going to have to pay more to cover your short. It's very simple. It's very, very common sense. There's no mumbo jumbo, right? You know whether the trade's going to work or not. And it's just a matter of practicing the execution. See, you're long 14, you sold one at 14 and 3/4, right? So you bought 3, now you're -1, you got 2 left. You got a 15 and a half sell order. If it gets executed, great. If it doesn't, sell it at 15 and a quarter, right? And then if you want to hold a runner, put it up here at like 16. But if it can't get over 15 and 3/4, then you know that the trade's not going to work. It's really simple, right? This is the look below and fail. There's your 16 print. Now you're out. Not the you're not going to get a private jet with this, but this principle works on every time frame. Look below, fail. You buy the fail, you put your stop here, and then you put your sell orders out where you know there's going to be sellers. If we clear the 16s, you're looking for 17 and a half. So say you bought 5 contracts, right? And you're off 3 now. You put your next 2 up here. Boom, boom, boom. You sell into strength. Everybody else is chasing it. You're out, right? While everybody else is chasing their tail, you have made your money. Go have a coffee. Very simple. I'm glad I stayed on instead of shutting it down early. See how simple it is. The sell orders that take you under 13 and a half are complete. That's what they mean. There's no such thing as unfinished business in a market. The orders are either complete or they're not complete. What is your confirmation? You just saw it, my brother. Look at the bottom of that candle compared to that. Look at the bottom of that candle. What is my confirmation? The offer lifts. Boom, boom. Go rewind this and you'll see it happen in real time. All you have to do, Harry, is just train your eye to see it. Once you've trained your eye, then you train your hand-eye coordination to take the trade. It'll take a little while, but just keep practicing because all it is, it's the candle. I wasn't even looking at this chart. When I'm trading purely on the candle chart. Don't look at the TPO. Focus on this, right? See how they're selling before that white line? So if you still had a couple of contracts long at 14, I'd be bailing here. Because you can see that they've moved the sell orders down from there to there. See? Now you know that there's a seller here. There you go. Simple. If you want to learn how to do this, come join us at Trading Syndicate. We're also giving away 10 free prop accounts. Come check us out. It's just really simple, right? That way, that trade will work on a daily chart, a 15-minute chart. You learn how to do it on a 1 minute because if you were long here and you got stopped out at 13, what's your risk? 4 ticks. Where else can you learn how to trade and risk 4 ticks? If the trade doesn't work, there's no reason to be long if it breaks 13. You own inventory at 14. There's no business reason for you to be in the trade if it's at 13. Someone is offering inventory at a cheaper price. You must bail. The business reason for the trade is that there is no supply under 13 and a half. The market rotates up. You are the supply. You buy 14. You are the supplier at 16. It is as simple as it gets. This way, your analysis is simple so you can focus on execution. Because all the analysis in the world is not going to make you any money. The money comes from executing. So you have to practice your execution. Like a pilot practices what to do when he hits turbulence. Okay? And that's it for us this morning, folks. Thank you. Have a wonderful morning. We'll see you at 9:15. If you want to learn how to do this, we're happy to teach you. TradingSyndicate.org and JJ. If you join up this week, please DM me. We will love to speak to you and help you with your trading needs. Thanks, folks. We'll see you in a few hours. Bye for now.